Hi, I'm Jeff Kowalczyk, and today I'd like to talk about the new accounting rules for leases to give you an understanding of the rules which are being put in place and ensure that your organization is ready for when those rules do take effect. The specific changes I'm talking about are the issuance of Accounting Standards Update 2016-02, which was issued in February 2016 by the Financial Accounting Standards Board in the United States, which requires significant changes to accounting treatment for leases under American Generally Accepted Accounting Principles for all types of entities that follow FASB. So I specify that it is American Accounting Standards rules because initially the purpose of this project was to align the US rules with the international rules. As they worked through the project, they realized there were some very fundamental differences between the way leases are perceived by US accounting standards and international accounting standards, and that they weren't going to be able to fully reconcile it. So they did not achieve alignment, but the rules are a lot closer than they used to be, and they also made sure that the rules are aligned with each accounting standards body's guidelines. So the FASB rules are in line with how FASB perceives similar activities. So the new rules were designed to improve comparability between organizations which lease buildings and equipment and all that, and those which purchase them. Because right now, you'll see there's some very significant differences in the way that those two types of transactions are held. Right now, all leases are classified as either operating leases or finance leases, and there are a few sets of criteria that go into defining which type of lease you have, and those are on your screen. I'm not going to go into them in detail, but keep in mind that if any of those criteria on the finance side are in play, then you have a finance lease under the current standards. And actually, that's not going to change. The operating and finance leases are still somewhat relevant, although their relevance is lessened. So I'll explain that in a little bit. But just keep in mind right now, if you have a finance lease, you are recording an asset. You're recognizing the item that's being leased as an asset, and you're recording a debt liability for the future principal payments on that lease. If you have an operating lease, you're not showing anything on your balance sheet right now. You're just showing rental expense as it comes due on your income statement. So under the new rules, all leases are going to be recorded as an asset and a liability on the balance sheet, regardless of whether they're an operating or a finance lease. The asset will be called right to use leased item, which will be a amount that's equal to the future present value of the lease payments, the lease liability, and it'll be an intangible asset which will show up on your balance sheet. As I said, the liability will be your lease liability, present value of future lease payments. Operating and finance leases will still be treated differently on the statement of changes in net assets, and the changes in net assets are going to see for a operating lease, you're going to have basically like depreciation where the expense is realized in a very ratable, even way, whereas a finance lease is going to be a lot more expense earlier on in the lease and then less as you go through the lease. The new standards have also revised the rules for complex leasing transactions, such as sale-leaseback transactions. Those are outside the scope of this talk, but if you have those kind of activities or intend to have those type of activities, you're going to want to make sure that you are setting yourself up properly under both the current rules and the new rules so you don't get caught in between. So we accountants love consistency, and just as the rules are changing for lessees, they will also change for lessors. The rules in general, if the lessee rule changed, the lessor rule will change to align. So there won't be anything different from what we talked about, except that everything will be flipped. The one thing that has changed is leverage lease accounting, where the title is held by a third party. That has been eliminated from the accounting standards, but existing leases, leveraged leases, will still be grandfathered in under these rules. So if you have that kind of transaction, that's something you're going to want to look at and talk with your partners to ensure that you are handling things appropriately for the new accounting rules. The good news, as I suggested before, is that for most organizations, the effective date is for fiscal years beginning after December 15, 2019. Public companies have an earlier implementation date, but for a nonprofit organization, most likely you're going to be looking at your first fiscal year after December 15th, 2019. So if you are a December year end, you're looking at December 31st, 2020 as the time for implementation. And if you are a June year end, you are looking at June 30th, 2021 as your time for implementation. However, that said, leases are generally multiple year items, and if you use a lot of leasing in the way you do business, you're really going to want to start planning for this now. You want to make sure that all leases that will be in effect in 2020, 2021 are being evaluated for proper treatment, not only under the current rules, but also under the new rules. If you use leases significantly, you're going to want to consider what impact this may have on your organization's balance sheet, what donors may think if they see a significant amount of leasing that might make sense for your organization. It might give donors pause. You want to make sure you're getting out ahead of this and just making sure that there's no issues. In conclusion, the new accounting guidance for leases is going to result in significant changes to the way leases are recorded. Currently, we do have a number of years before we have to implement, but due to the long-term nature of some of these leasing transactions, we really want to start looking now at the leases we hold and plan to hold and ensure that we are getting ready to implement appropriately. Because the standard is so significant, it's very likely that additional clarification and potentially alterations to the standard will be issued as the implementation date approaches, especially once public companies have started to implement. You often see a mini flurry of corrections and explanations and things like that as they sort of start to actually work with the standard and realize, oh, it forgot to account for XYZ. So what you want to make sure you're doing is listening in and finding out as the implementation date approaches whether there have been any changes or any additional guidance that might be of assistance. And I'm pretty sure that we will have at least one more presentation about this prior to implementation, probably more than one if I had to guess. But for today, with this being a relatively new standard, that's all I have for you. I hope this was helpful. Thank you and have a great day.